All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, August 15th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here today, another trend day up here. So markets having a really good bid. We had jobless claims, and now jobless claims, I think we talked about this a little bit yesterday. Typically, they're not a big market mover, or they haven't been recently, but the jobs data is now starting to overtake inflation data, right? So employment takes a little bit higher, it's higher on the totem pole now for the market. And we mentioned that last week with the ES. Remember that big move on jobless claims? That's where we had that big low put in last Thursday, and again another trend day up here for the markets. This may be the new pain trade, and I've talked about that a little bit recently in regards to bonds, but I think the new pain trade might be this rate cut stuff. The market is really short bonds, they're short stock, and they're short commodities, and that can be unwinding here with that better than expected retail sales and better than expected jobless claims. Remember, good news is good news now. So less jobless claims is good for the market. At TNX here, 10-year, trying for a higher low. So especially if you get back above 4%, I mean, I could see this back at 420. And, revisions are not, we know the street doesn't care about revisions. They only care about the headline number. But revisions are not. CPI is still at basically 3%. What if the Fed doesn't cut? We got Jackson Hole next Friday. That's going to be big, and they'll indicate whether they're going to do that. But the Fed fund futures has been wrong this long, right? Remember last year of May, they said that there was going to be cuts by September of 2023. We're still waiting on that. So nothing to say the bond market can't be wrong again. But that may be the new pain trade right now. I tell you, don't try to swing for home runs on this recession stuff because you're in a crowded trade. And you can see that right now. How do I know it's crowded? Because look at the market go up. Massive moves. Now, that said, you guys know I've been the biggest bull on the street for a while here. But even I'm like, okay, this is getting a little out of hand. Vol trade is completely unwound. So all of that that leverage short vol is completely unwound now. It's right back to where it was. And spiders now are back to, look at this. I mean, the SPY is a little bit different, but I think, than SPX cash. But I mean, are you kidding me? We're into a 786 already. That is wild. So we're now positive for the month, right? We look at the monthly candle. Look at that. And that's all unwound already. Up 8% from the low in 9 days. So crazy stuff here. Now, I've been a big bull here, but this is a little out of hand. At least we're going to get mean reversion here. If you're holding long, just make sure you're trailing on the way up, because we'll get a violent mean reversion at some point. We'll get a good slice. But what a move here for the market. And we talked about these trend lines here. Look at the ES just acting like they don't even matter. So right into that level. And every time I say that we're going to mean revert, I thought 550 would be max move. I still think there's a high chance we'll close the week at 550. I think we'll pull back tomorrow. I know I've said that the last 2 days, but I do think that is the case. There is some GEX here. I can show you actually. I'll just plug it in on SPY right now for tomorrow. Right now we have a level at 553 if you want to see that right there. And that's why we're stalling out right there. But if I plug that in for tomorrow, you can see 555, right? So let's say we gap up tomorrow, we get another euphoric gap tomorrow, we could pull back into that 550 handle. So I know there was some charm levels there too, Vanna charm levels at 550 as well. We have Michigan consumer inflation tomorrow. Could be an excuse for the algos to just yank it back and take some profit. And not to mention, I just showed you, we're into a 786, so you got that resistance as well. For the cash S&P, it's just a touch higher. You can see, 5550, whole round number. We're going into the breakdown. This is where we broke down, right? This is where bears stepped in and said, nope, we're letting the Black Monday after the FOMC. So there should be sellers up here, you'd think. At least people who bought thinking that we're going to go back to all-time highs, and they chased along. They're getting back to break even, so they may turn into sellers. But either way, what a rally here. Again, don't chase it. Wait for dips, wait for pullbacks, wait for consolidation, but an amazing move here. We're still not out of the danger window. I know that sounds insane, but we can get sharp sells here off of this. And the danger, like I said yesterday, is that if you get all the bears out of the market and there's still geopolitical risk, there's still macro risk, it does open a trap door. But right now, I mean, the market's acting like, it's just had an impulsive move above this trend line. So you got to respect that here. Look at the NQ. Everybody's telling me a week ago that we were breaking down because we broke a trend line. Go back, watch my video that I did last month. I said it was a whole video on trend lines, and you don't worship them. Like, they're good, but don't worship them. Just because a trend line breaks doesn't mean that you're in a bear market. It doesn't mean that you're in a bull market. We broke this one and then we went to the bigger one. So we're right back above, and NQ into the 618 to the penny. So again, maybe we pull back tomorrow. It's into the 50% or 50 moving average. Also, the triple Qs here are into the 618, just above that, just above the 50. I mean, just this amazing move. Totally amazing move. This is why you don't stay bearish for too long, and you always want to be buying into fear, not selling. So when I saw VIX at 66, you don't want to be a seller here. And it's only down, 50 points from there. We're right. This move never happened. So already, just unbelievable historic move here. So that's what it is for tomorrow. Again, I could still see some mean revert. We will get mean reversion, just a matter of when. Right now, look at these candles, like on the 10. Like it's getting a little tired up here. Doesn't mean they can't try to gap it up again, but we've had basically at least 2 trend days in the last 3. I don't think we're going to have a 4th tomorrow. That would just be absurd. But we'll see what we get tomorrow. Amazing move here. Amazing move. So short term, looking for a mean reversion at some point. And when you travel 450 points in 9-10 days, mean reversion could be 200 points. So just be aware of that. But or it could just be consolidation and chop, like it was here, which I think that was actually 200 points. We went up to 53, 46. Yeah, basically it's like 150. But right now, very good move for markets. Weekly, very good. Never closed below the weekly 20 MA. Look at the ES. Fat tail candle. Very powerful move. And volume light, that's helpful for buyers. Well, we'll see. We get OPEX tomorrow. They may decide, hey, it's time to burn calls out now, and we'll get a little bit of a pullback or a dip. I think my base case, I think we go to 5, close at 550 tomorrow, but we'll see. I've been wrong this week. I thought 5,400, would have been at least more than look at this, like a 1 hour pullback. It took us a week to break through it, and we just went through it. So bull's really strong here. Volatility coming in. VVIX below that key 110 area. It is off the lows today. So again, maybe we bounce tomorrow. Volatility needs a dead cat bounce here at some point. But very, very volatile markets. A lot of the moves being done during extended hours too, which is a little bit frustrating. But either way, we'll see what we get tomorrow. So we know the levels on the Qs are right into the 618. 480 has also been a big pivot point for quite some time too. So above that, you got the gap fill there too, if we were to get into that. But again, you can see the 618, which we're just smashing up against right now. On the NQ, it's actually technically like right there, as you can see. So right in that area, 19.6, we'll call it. So big levels. IWM, where's all the haters? Everybody was dunking on the Russell 2000 for the last couple of weeks. Look at the monthly now. Now all of a sudden it looks like a breakout and a test candle, especially if we close up at, let's say, 215, 218. Now you've got an inside hammer. So where's everybody at? Where are you? Everybody was dunking on it a few weeks ago. Right back up. 215 is resistance right now. Diamond 406, what a move. So right through 400, just gapped right through it. That's impulsive. So that's pretty strong. There is a little trend line here. Maybe in the short run. Right up there. We'll put it on our diamond chart. So, you know, right in this area, we'll just put it through those. So we'll say that's like 408. But good move for the Dow. SMH up 4.25. Again, this trend line doesn't even exist. It just right through it. We'll see where it closes the week. Again, we could pull back tomorrow and then just close right on it. Same thing with the ES there. I mean, look at this ES trend line. This is just went right through both of these. Socks, same thing. Basically just gapped above it pretty much. I believe there's a yeah. Oh, so we get the 50% fib. Yeah, so we're through that. Let me just check the SMH. I think that's close to the. Yeah, so 618 for SMH is at about 250, 251. My cloud software is doing good still. I mean, this is just ridiculous. Like, this should have been more than a one-day pullback. We talked about that yesterday, and that tells you what I said yesterday is that when you just go through levels like that, it's telling you that there's impulse behind it. Again, trend line maybe right into this area. I mean, almost at the 786. There is a pivot right here, so that may need to stall out. But what a move for cloud. And again, I talked about this a few weeks ago when we sold off. I said, cloud, if it firms up, when you go to the monthly, the bigger time frame, there's nothing wrong. And look at it now. Hammer candle. Basically back check to the 20 MA. This can go higher. This can still go to my target of 92. And I think it might. In time. Dow Transport's big move here, although they came off the highs. But still above the 20 MA. And we talked about 15, 6, 7. And that's where we are right now. We shot through it a little bit. You can see the first candle of the day. Boom, big move on the index. And then kind of came back in off the highs. But yeah, good move there for DJT. Let me just take a fib there too. Yeah, right to the 618. So right in that area. Again, you're going to see mass anger if this ends up being an ascending triangle. And it is one. It just... Don't shoot the messenger. I'm just showing you the chart. 2-year yields inching back up. So yield, I'm rooting for this to happen just for the comedy value. But I really hope the yield curve just uninverts again, just because I want to see people's heads explode. But right now, above 410 here on the 2-year yield. Yeah, we get through that. You know, you got a little bit of a level at 420. And then, yeah, it can go back to 440. So yield's getting a bounce here. I think people are way too long bounds, personally. 395 for the 5s, 10s, 4% above that. I mean, it can probably go back and retest 420. And then 30s, a little bit softer here, but, you know, 433 to 442 are the levels there. Home builders back in a better position now. So we're back above 110. That's important. I'd like to see us close above 111.32 to kind of negate that reversal bar, but good action. And again, weekly chart was never really damaged, was it? So use those bigger time frames. They'll help you out. VNQ up 28 cents. This continues to be one of the strongest sectors in the market. So pretty strong there. XLF gapping up. Not doing much intraday, just kind of a doji, but weekly, again, never did any damage. KRE was one of the big winners today, up 3%, outside move up. Again, we talked about this with the Russell. Remember the RTY yesterday? Yeah, we had that, the IWM, it was kind of a sloppy consolidation pattern, but if you look at the RTY, it's got a nice inside bar, and it obviously you're seeing that follow through. Regional banks, same kind of look. Up move, and looks like we're going to close above these pivots, which is a positive. Next level is that gap fill. KBE, you know, around 52. Broker dealer is up again today. That's almost all-time highs here. That might need to stall out though. Oil holding up as well. A lot of commodities were rallying today. Specifically things that shouldn't be up during a recession. Oil up 92 cents. So holding up okay. XLE had a really good day. Up 1.25. Higher high and higher lows now confirmed. XOP, same thing. Again, that's going to 142. And then OIH finally getting a little outside move. Still soft, though. I want to see this up tomorrow nicely. But if we can reclaim that wedge low, it could be a false breakdown. So it's trying. CCJ, again, still looking for 42. nothing has changed there. URNM still same thing, looking for 43 in that cap fill, but this has kind of been a weak bounce. Nat gas got to our target 230 and pulled back. Right now, this is still basing though, so we have this little up move above 215 area, and it's just going sideways. So I think this wants to get up to 240. Might need to do a little bit more consolidation though. Dollar index trying for a higher low here. It did come off the highs by the end of the day, but it's holding up. And again, like yields, hey, who knows? Maybe that's a W bottom. I want to see where this closes the end of the month, but 103.88 is still master resistance right now. Dollar yen, we're going to 150, like I said, and we basically almost got there today. So that just back testing that trend line, the 20 MA. Yeah, we're almost there. Carry trades back on. It's almost as if it never left. Again, my take is it was leverage short vol blowing up. This was collateral damage, and it wasn't nearly as much as the fear mongers were making it out to be. But in any case, gold here continues to be strong, one of the strongest assets, period. It's hovering below 25, no problems. Silver, nice up move, up 4%. Again, commodity, you know, I think commodities are undervalued here. I think metals are the same way. Platinum, good outside move, beautiful. Hasn't failed that bear flag yet, but it can with a close above 967 spot 8, sorry. Palladium up 1.6, looking better. And copper, we did get some gains on this in the trading room today. Yeah, nice spot, like I think it's 7-8 cents. And I'm still looking for this to go to 420 and maybe 425. Falling wedge breakdown, or breakout rather, heavily shorted, people just dunking on it constantly, which was the opposite of what it was 2 months ago, 3 months ago. And we went into some major technical levels too. Additionally, I know that based on positioning, that people are short, and they're all trying to hit a home run, and they're all crowded in the same recession trade, and that's how you get these squeezes. But perfect 618 hit. Been telling you guys in these videos every day, I like it down here, and we did get into it the other day, and nice pop there. So we did get some profits, and now we're holding risk-free. So I still think it has some legs to 425, maybe even 430. Bitcoin, a little bit on the weaker side, not really participating in the rally all that much. Still nothing terrible. It's down 2.7. But again, this is why I said I wanted it to get above these moving averages and have this pattern. Is it just indicating a little bit of weakness? The only way I would get concerned is a close below that green bar there. And then, who knows, maybe we go down and test the lows again. But big picture, still a big fat consolidation pattern. So you want to see that firm up here. So let's take a look here. Market's holding up for the most part. Yeah, we're just right off the highs today. Russell's a little bit coming in just a little bit here. But and you're seeing volatility come off the lows too. So again, maybe a little bit of protection being bought. We've had, I don't know, like a 400-something point rally. That's like, so, you know, there's going to be a little bit of protection bought here. And now that it's completely round-tripped, I mean, I guess it's as cheap as it was before the August FOMC. So, and I think even before then. Yeah, I mean, we got to go back to the 23rd, which was right here. So either way, we'll see. Maybe we get some mean reversion tomorrow. We will get it over the next couple of weeks, but the only kind of red flag here would be it's just how quickly we've gone up. That does make me a little nervous. But I mean, it's also very impulsive. So I think at bare minimum, we'll get mean reversion over the next, at least day and then maybe a week or two. But market definitely showing why you buy into fear and don't listen to the large accounts out there that have a shitty track record. So anyways, guys, so I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.